You've probably noticed airline stocks have been really climbing lately, haven't they?
Oh, absolutely.
It feels like we're hearing about them taking off almost constantly. But, what's really fueling this
Mhm.
renewed optimism?
That's the big question. And if you want to gauge the health of the whole travel scene, Delta Airlines is often, a key indicator, a bellwether for the industry.
Right.
Their performance can tell us a lot about where things are headed. And honestly, what's up with consumer spending, too?
Exactly why they're so important. So for this deep dive, we're not just going to skim their recent numbers.
Oh, yeah.
We're really digging into Delta's latest Q2 earnings report, all the analysis around it. And our mission here is to pull out the most important bits of info, broader travel trends, maybe some surprising facts, and really what it all means for you.
Sounds good.
Okay, let's unpack this. So Delta kind of kicked off the Q2 earnings season, didn't they? And that initial market reaction was pretty electric.
It really was.
From the reports you've looked at, what was the most maybe surprising thing that really sparked Delta's stock and then, spread to the others?
Well, the market reacted with quite a bit of enthusiasm. Immediately after the report dropped, Delta's stock, that's DAL, it jumped more than 12% in morning trading.
12%?
Wow. And it wasn't just Delta. This really lifted its competitors, too. You saw United, UAL, up 10%,
Okay.
and American Airlines, AAL, was up about 8%. It just shows you the immediate ripple effect one big airlines report can have across the whole sector, like a rising tide,
That is a huge move off one report. Okay, but let's get into the actual numbers. What do the core financials from Delta's Q2 earnings really tell us?
Right. Diving into the financials. So Delta reported Q2 earnings per share, EPS, of $2.10.
Okay.
And this actually beat the analyst expectations. They were looking for about $2.04, so it beat by nearly 3%.
That's pretty good.
It is. Now, what's important here is this was actually a bit lower than the $2.36 they earned in the same quarter last year.
Ah, okay. So a tough comparison then.
Exactly. That prior year quarter was incredibly strong, so yeah, a tough comp. Then on the revenue side, operating revenue came in at $16.64 billion.
Mm-hmm.
That also topped the estimates, again by about 3%. But like the earnings, it dipped just a tiny bit from $16.65 billion a year ago.
So slight dips compared to last year, but still beating what the market expected.
Precisely, and beating expectations, even with those slight year-over-year dips from a really strong base. Well, that's a very positive signal for investors. It says things are still looking pretty healthy.
Okay, now beyond just the earnings and revenue, this is where I think it gets really interesting. What does this report tell us about how people are actually traveling now? What are the signals for broader consumer behavior?
Yeah, this is where Delta's report really acts as a leading indicator. The numbers show pretty robust demand, especially in key higher value areas.
Like what specifically?
Well, for instance, revenue from premium cabin sales, think first class, business class, that rose a healthy 5%.
5%.
Okay. Which isn't just, good for Delta. It gives us a fascinating peek into consumer choices. It suggests that even with economic shifts may be happening, travelers are still prioritizing comfort, amenities.
Mm-hmm.
They're willing to pay more for it.
So a resilient demand for leisure, especially maybe at the higher end.
It seems that way.
Mm.
And maybe even more telling, their loyalty program revenue spiked by 8%.
8%. That's significant for loyalty.
It really is. And just to put a number on it, Delta got a huge $2 billion payment remuneration from its partnership with American Express.
$2 billion just from Amex.
Yep. Amex, of course, is the exclusive credit card issuer for Delta SkyMiles. And this just underscores how incredibly vital these credit card partnerships are for airline loyalty programs.
Wow.
And, for the airline's bottom lines by extension, these specific figures, the premium cabins, the loyalty, they really show a strong, resilient demand for those higher value travel experiences. Tells you where people are choosing to spend.
Okay, so they're showing strong results, strong demand, people wanting to fly, especially in comfort. But beyond just beating earnings, how else is Delta, actively reassuring its investors, communicating that long-term picture?
Well, a major highlight, something that definitely caught investors' eyes, was the official increase in their quarterly dividend.
Ah, the dividend.
They boosted it by more than 25%.
Mm-hmm.
So the payout goes from $0.15 to roughly 19 cents per share.
That's a nice jump.
It is. And the first payment at that new rate is set for August 21st for anyone holding shares by July 31st. It's sort of like Delta saying, hey, thanks for sticking with us. Here's a bit extra.
Yeah, a tangible reward.
Exactly. And beyond that, and this was very reassuring, I think, for the whole sector, Delta restored its full-year guidance.
Okay. Because there were some worries earlier, right? About tariffs and demand.
Precisely. Those concerns had dampened cross-border travel demand outlook a bit, caused some turbulence for airline stocks earlier in the year. So they reinstated their fiscal 2025 EPS guidance.
And what's the number?
They put it at $5.25 to $6.25 per share, which, interestingly, is actually above the Zacks consensus. That's like the average analyst forecast, which was $5.11.
So they're guiding higher than the street expected.
Yes. And they also reaffirmed their expectations for full-year free cash flow, keeping it at $3 to $4 billion. These moves, the dividend hike, restoring guidance, they're more than just trying to please investors.
Right.
They're strong signals of confidence in the travel sector's future. It suggests Delta, being a key barometer, sees this rebound as durable, not just a flash in the pan.
Okay, that's a lot of positive momentum from Delta. But how does their performance actually stack up against their peers and, the broader market? Where do they fit in the bigger picture?
Yeah, it's an interesting comparison. Even with that sharp rally after earnings, Delta stock, DAL, is actually still down about 7% year to date since January 1st.
Oh, really? Still down for the year?
Still down. And in comparison, that's trailing the main benchmark, the S&P 500. Which is up about 6% this year. It's even trailing the specific Zacks Transportation Airline Market Index, which is down only 3%.
And compared to United and American?
Well, United UAL is down about 5% year to date. But American Airlines AAL, their shares are down a pretty painful 26% in the same period.
26%? Ouch.
Yeah. However, if you zoom out, look at the last 3 years.
Okay.
DAL has actually seen a very impressive 95% gain.
95% in 3 years, that's solid.
Very solid. Now, it has trailed United's, frankly, staggering gains of over 150% in that time.
Wow, 150 for United.
But Delta has still impressively beaten the broader market and most of its other rivals. American Airlines, for example, is actually down 4% over those same 3 years.
Down 4% versus up 95%. That's a huge difference within the same industry.
It really highlights how different paths can emerge, doesn't it? Now, talk about valuation.
Yeah, are they considered cheap or expensive now?
Well, airline stocks generally are often seen as pretty attractive for long-term investors. And that's because most of them trade at significant discounts compared to the S&P 500's average. The S&P trades at about 24.2 times its forward earnings.
Right.
Delta, specifically DAL, trades at just 9.9 times forward earnings. That's well below the airline industry average of 13.9 times.
So cheap compared to the market and its own industry average.
Relatively, yes. And another metric people look at is forward sales. Many airline stocks trade under what's often seen as a good value level, less than 2 times forward sales. Compare that to the S&P 500's 5.4 times.
Okay.
Delta is right on par with the airline industry average there at 0.5 times forward sales. So valuation-wise, arguments can definitely be made for attractiveness, especially for long-term views.
It really sounds like Delta has set a pretty high bar for the rest of the industry this earnings season.
They certainly have.
So what's next? Who's reporting soon, and what should we be watching for from them?
Yeah, Delta definitely set a strong tone. Producing double-digit operating margins, 12.6% in Q2 using GAAP.
That's generally accepted accounting principles, right? The standard way.
Exactly, the standard rules. So 12.6% is quite healthy. What's next? Well, we've got United Airlines reporting next Wednesday. That's July 16th.
Okay, United next week.
And then American Airlines follows on Thursday, July 24th. Now, while Thursday's rally was, very promising for airline stocks getting some momentum back, it's interesting to look at the Zacks rank. Both Delta and United currently have a #3 rank, which basically means hold. Suggests analysts see them as fairly valued right now.
Gold.
Well, American Airlines stock, AAL, lands a Zacks rank #4, which is sell.
Sell? Ooh, why is that?
Well, it indicates analysts expect it to underperform the market significantly. And digging a bit deeper, its earnings estimates, the EPS forecasts for fiscal 25 and 26, have actually continued to decline just over the past week.
So downward revisions even after this rally.
Yeah. Exactly. Which might suggest that, while this sector got a boost, there could still be better buying opportunities ahead for some names, but maybe not AAL right now, according to that system.
So wrapping this up, what we've really seen is Delta posting a very strong Q2.
Yeah,
And it's not just about their own performance, is it? It feels like a significant signal for the whole travel sector, maybe even the wider market.
absolutely.
This kind of deep dive really shows how digging into one company's report gives us these crucial insights. Insights into complex finances, but also, what's happening with us, the consumers.
Precisely. And as you connect this to the bigger picture, understanding these individual reports, especially from bellwethers like Delta, it's just crucial for getting a handle on those macroeconomic trends, those shifts in consumer behavior.
Yeah.
They're not just abstract numbers. They really reflect how people are spending, where they're going, what experiences they're prioritizing. It's almost like a real-time pulse check on, consumer confidence and spending habits.
It's truly fascinating how one airline's quarterly results can reveal so much about our collective economic mood, you could say. So, thinking about all this, what really stands out to you about how these airline reports might signal broader economic health? Or maybe, looking at these trends, where might the next turbulent sector, so to speak, emerge? Lots to think about there. Keep digging into those numbers.